The broadcast is now starting. All attendees are in listen-only mode.
Hi guys, thanks for joining me today. I'm going to have my partner Steve Dahl from up in Chicago with us during the presentation. We'll be starting in about 8-9 minutes. Can everyone hear me? If I could get a sound check, maybe answer yes in the question area. Let's make sure I'm a technical troglodyte here. Great. Thanks guys. I'll be back and we'll get started in about 7-8 minutes. Hi guys, we're going to be getting started in about 2-3 minutes. Hi guys, we're going to just give it one more minute and then we're going to get started. Okay. Hi guys, I'm John Logan and I think we have Steve Dahl with me. Steve, you there?
I'm here, John, from snowy and cool, but yet a lot better than it was 2 weeks ago, Chicago.
Great.
It was quite a slap in the face, John, coming back from Silicon Valley, where, as you know, we spoke to some options groups out that way. Is about a 50-degree turn in the temperature.
Yeah, there's snow on the ground here in North Carolina, so I hear you.
Sky's falling, brother.
I hope can you guys hear us? Just want to do one more sound check before we get started. Sometimes GoToWebinar has some technical issues. If anybody, great. Thanks, Carl. Thanks, Bill. Thanks, Richard. Well, Steve, I'm pretty excited about what we're going to talk about today. And you're going to add some color to when I get started. But today we're going to talk about something that is near and dear to my heart, some information that we've created that I hope all of you can benefit from. One of the things that has really been, I guess, the backbone of everything I've done in the trading world for a long time, and Steve also, has been the concept of market profile. And what we've done together is basically distill that pretty subjective way of looking at the markets and organizing data into a very objective, rules-based environment. And today we're going to show you two products that we've developed that I believe takes all the guesswork out of finding incredible opportunities when it comes to equities, futures, and Forex with our derivative of the original market profile. So Steve, let's get right into it. And
sounds like a winner.
Yeah, let me figure out how to use my PowerPoint here. Okay, here we go. I know everybody's going to read this risk disclaimer later, so you can catch it on the recording. So we're just going to blow right through this. A little bit about me. Done quite a bit in the institutional world. I was in the Chicago Board of Trade along with Steve for years, and owned a pretty big broker dealer up there at one point and some proprietary trading groups, and have done a lot of programming to try to automate things as far as some of the indicators that we use, automated systems, things of that nature. Steve, if you want to say a little segment about you and some of your background, that'd be great for everybody.
Sure. My background is not as expansive as yours, but certainly I spent my fair share of time in the institutional and professional side of the business. I was a commodity futures analyst and broker for 15 years, so that put me in a position where I had the great pleasure of working with literally thousands of traders, just like probably many of you in attendance here, and kind of firsthand make some mistakes myself, observe a lot of mistakes that I see traders making on a recurring basis, and then most importantly, of course, go on a quest to finding how we can cure some of those issues. And that's actually, John, how you and I crossed paths, 16 years ago, and changed my trading life and the trajectory of everything since then. So it's my hope that possibly we can do the same for a handful of folks today.
Yeah, one of the things that Steve and I pretty much decided together is that market profile and our derivative of it was the only really concept that we could always lean on and get through the minefield on a day-to-day basis. So that being said, we're going to first of all talk about the power of market profile. We're going to give a little bit of a dissertation on the original concept, and then we're going to go right into how I think we've made it super easy to use market profile, look at some indicators that we've developed that surround that concept. We're going to look at a scanner that we sell a lot of these to institutional contacts in the Bloomberg world especially. It was actually born out of that scenario where a lot of portfolio managers wanted something to generate ideas and alpha, as they say, and the scanner really kind of picks out some high probability opportunities to trade option strategies or just go long and short around. And then we're going to kind of put it all together and take some question and answers and hopefully give some real-time examples. So a couple of questions to start out with. How can we block out one side of the market to know when to only go long or only go short? So that's really the key, in trying to make it as black and white as possible. Is how do you know when it's okay to be long, not okay to be short, or okay to be short and not okay to be long? And I think what we've done really kind of clarifies that, makes it relatively black and white. How do we find the best opportunities related to market profile across the entire marketplace? Where are the areas to be aware of to enter and exit these opportunities? And what types of trading strategies can be used to take advantage of them? So here's what we call our profile indicator. Some people call them boxes. And what it is an automatic algorithm that outputs our version of market profile and gives it basically distilled down into 3 lines that you can pay attention to here. These inflection points, as I like to call them, the red line, the blue line, the green line, these are within what we call the balanced area of a stock. And we're just looking at a sample of Apple with the profile indicator on top of Apple. And the other thing we're going to talk about today is our scanner. All right. And this is a standalone piece of software. You do not need a data feed for it. We deliver everything. And it's an installation file that is pretty easy to get going very, very quickly and gives a lot of information. It's hard to pack everything into an hour to talk about the scanner alone. So we're going to kind of brush on some things, but we probably won't be able to cover everything. But Steve, as you know, you've done an incredible job on the educational scene with this information, and you and I have created a mountain of tutorials that are going to be available to everybody that, again, gets involved with what we're doing today. All right, so first of all, we're going to talk about the original concept of market profile. And what we're not going to talk about today is a lot of people look at volume relative to time. All right, and that's what most bar charts are showing with volume down below. So this is a time bar, it's a daily bar in this case, and then this is the volume that happened during that time frame. We're going to be concerned with volume relative to price, and the original market profile talked about time related to price, time of time that the instrument stayed around a certain price. But what we're going to talk about today is volume relative to price instead of time related to price of the instrument. So that being said, we're going to get right into a very quick dissertation on market profile. So the original concept was divided into 30-minute sections of the day, and how long or what was the price span during that 30-minute section. Then the next 30-minute section, then the next 30-minute section. And what Pete Stoudemire did, who I worked with for about 2 years in the Board of Trade, is he labeled these price spans letters, basically. I'm making this really, really quick. So B, C, D, E, and this is a mirror image of what happened over here. It's just labeled letters instead of the black bars. And at the end of the day, to make a completed profile, he collapsed all the letters onto their self to the left and created what was called a completed profile. And these are called time price opportunities in the original market profile, auction market theory. But what we're going to do is talk about volume relative to price instead of time relative to price. And what I want to do is take a look at looking at volume relative to the price span, but you're used to seeing price on its horizontal axis. So what I'm going to do is just kind of turn that to its familiar metaphor here. So price is usually like this, and then the amount of volume that occurred at any particular price is reflected in our volume profile relative to that price. So you'll see, certain price levels, there was only certain amounts of volume that happened down here, but there's a kind of a meaty part of this profile, if you will, of our derivative of the original market profile. And what that analogy really is when it comes to a bell curve analysis is you've got most of the data lying within about 70% of the normal distribution. Okay, so you've got the outer limits here, which are standard deviations away from that peak of distribution of this normal distribution. And what we want to be concerned with is this particular meaty part of the bell curve, this balanced area where prices have a chance to really be in a fair auction here. Now, what I'm going to do is turn it on its side, and you're going to kind of see that this is that familiar volume profile looking picture that we looked at before. And this particular meaty part of the bell curve is what we're going to be concerned with today. And of course, the outer limits, like I just spoke of, these inflection points on the outside of this balanced area. So what we've done is distill it even farther down to, as you remember what we looked at on that chart, and we are recording this. So if I go kind of quickly here, you're going to be able to review this and even get more confused later. But one question somebody already has, can you use this for day trading futures? Steve, do you want to answer that question?
That's a wholehearted yes. It works very well in the fastest show in town, but you also can swing trade. You also can long-term trend trade, as John spends more time in the longer-term stuff. But a wholehearted yes. It's important to note you also can deploy not only time-based charts, but this does work range-based, tick-based, Renko, and case bars as well for those of you that enjoy those other types of data dicing. Okay.
Great. Yep. So we kind of grew up in the futures world, Sammy, who asked that question, and have done a tremendous amount of options on futures work. So we're used to short-term trading, but we're going to talk about how kind of that in particular how I use and how Steve may use the information to trade on longer term, intermediate term, and short term today. So I always personally start out with a long term view and then kind of drill down into shorter term views, but to try to block out one side of the marketplace. But we'll give some really good real time examples in a little bit. So just sit tight, and we're just going to get through some of the formation material here first. So what we did is basically distill it out even farther. And if you remember that chart we did before on IBM that I showed you of the volume, or excuse me, the time bars with the volume down below, we're going to take a look at that same chart in a second with these profiles overlaid. And what this is, again, is the outside perimeter here of the balanced area, the unfair high, the lower limit of the balanced area that we saw in the bell curve analysis, the unfair low. And this is the most voluminous node in the profile itself. And we're going to call this a POC, or point of control. It's the mode of the profile. Okay, so it's the most high volume print aggregate of this particular balanced area. So distilling it down even farther, we're basically, Steve, going to talk about the red line, the blue line, and the green line, which again is a product and a derivative of what we've been talking about with the balanced areas. So one thing I want to finish with here is markets are either balanced or imbalanced. And balanced markets are an expression of time dimension. And there's that red line and green line, and there's that balanced area. And imbalanced markets are an expression of price dimension. So success in trading is dependent on traders being able to accurately differentiate between these dominant phases of market movement with near certainty. So that's what the profiles are all about, and the derivatives all about, is trying to let you identify when markets are balanced and when they are moving out of a balanced area, and more importantly, where to pick your battles to enter trades, all right, either long or short. Here's that same IBM chart that we looked at before with the volume bars down below relative to time, but now we're looking at volume relative to price. So this is an algorithm with this particular indicator that the scanner is completely predicated on, that analyzes volume at price and automatically puts it on your screen. You do not have to do anything. When the new profile is, again, predicated to appear, it will appear, and you don't have to do anything, set them. These are not painted after the fact. So what I wanted to show you really simply is, as IBM is, again, picking battles at inflection points, staying above profiles or within profiles. When we finally broke down below profiles, that was at about 180 on IBM. I know IBM's got some news today. How nice would it have been to know when it's changed from okay to be long, not okay to be short, to okay to be short, not okay to be long, and then very rare instances breaking above profiles until recently. This was taken about a month or two ago on IBM. So I just wanted to show you a real-time example of it on a chart. The general rules, and Steve, please jump in anytime here. The general rules of using the profiles is don't be short when price is trading above a TAS profile, and conversely, don't be long when price is trading below a TAS profile. Now you'll notice there's thin profiles that stay in force quite a bit, like that one, wide profiles, and what the algorithm calculates, it's a volatility algorithm, that the wider the top to bottom of the profiles, the higher the volatility, and the thinner they are, the lower the volatility. So if you're an options trader and you see a profile like that staying in force for a while, you know that you're more than likely going to have low volatility to high volatility movements. And again, if you're an options trader, you know that when volatility is low, you're supposed to be buying volatility. And I know the VIX has been low for a long time. Thank God it's starting to change a little bit lately. But when you start seeing new profiles appear like they did here, about 85% of the time, those profiles are fully explored to the other side. So this is a kind of a take the weight off mechanism. And also, since it's a relatively wide profile, we're also gleaning information out of this by way of, hey, you could have some volatility here. You may want to at least take half the position off, or take it all off and wait for a better entry. If we break out again, so be it. But again, this is about trying to use the profiles and what the outputs are. And we're going to talk about this in real-time examples in a little bit, and I think it's going to be a little bit more clear. But the scanner, again, is predicated on this basic principle of trying to make sense of where the balanced areas are for a stock, where the fair auctions are, and also imbalance areas and balanced areas. So this is just a color-coded example of silver that I took a couple of years ago, and just color-coded. Again, we're trading above profiles here. we're trading within profiles, we're trading within profiles, okay to be long, okay to be short, balanced area, okay to be short, okay to be long, not okay to be short, warning area. There's a lot to be said for profiles edging up or edging down. Those are, and we're going to show some examples of that, but just wanted to show you kind of a color-coded scheme here of silver. Here's Tesla. I took this about a month or two ago. In this, and I know Tesla is a crazy volatile stock, but if you look at Tesla, that went from about 200 to, I don't know, let's just call it 370. That's about a 170 point span, but if you use that simple concept that I just spoke of, you'd actually picked up 425 points, and I didn't even count some of these, just general breakouts here and pullbacks into inflection points as profiles were edging higher. So you've got breakouts and pullbacks as long as profiles are edging higher. And here's a really good area to base a credit spread, like a put credit spread on. We're going to talk about some of those strategies later. But same type scenario with Apple. I think Apple in this example moved up about 80 points. And I think if you add all these up, you've got about, I don't know, about 150, 160 points here. So again, okay to be long, not okay to be short, okay to be short, not okay to be long. These are very general rules we're talking about right now. So what if we could use this information to scan the market for opportunities? And what if we could increase the odds of these opportunities by being able to also market time the index? And what if we put all this into an easy to read dashboard? So, Steve, as you know, the scanner, and I'm going to show this really quick, it has a lot of different areas that you can glean information out of. It's got a dashboard that you can save your favorite picks, come back later, look at stocks on different time frames, different charts, and look at the market almost as if you're looking, I guess, like Neo in the Matrix. You're looking at color-coded cells that have numerical values and sometimes letters, and also allow you to sort the entire marketplace, the NASDAQ and the S&Ps, by just clicking a couple of buttons here. And we're going to talk about these sorts in a little bit. So any type of custom sort you want to see with the particular cells to find an opportunity in the scanner, you can do. So if I want to find stocks that are trading up and then all of a sudden are starting to break down on their intermediate, and I actually want to sort that, I can find a bar that's happening for the first time trading below a profile in a stock that was pretty strong. So I just picked out Williams Companies, and what this stock has done is basically reversed. It's gone from okay to be long, not okay to be short, the okay to be short, not okay to be long. And again, Steve, we've done a mountain of videos on this. It's hard to kind of get all the points across in an hour. So on the scanner in particular, I think we've done 3 hours of videos that you'll have access to on each particular part of the scanner. And we're also getting you a 6-hour course in market profile today that was relatively a long process to do. So we're going to have plenty of educational material for you in the offer today. So I want to go through a couple of features in the scanner in particular. Knowing the state of an instrument on different time frames determines the possibilities and, more importantly, the angle of attack if warranted. With a color and numerical system, this allows you to quickly view and understand the instrument without looking at the charts. A lot of people, they question, like, why don't you use charts anymore? Why are you looking at these cells all the time? Because the cells actually tell you a lot of information. You can mouse over the cell, get the major inflection points, the balanced areas, understand how to find stocks acting a certain way within the scanner that you want to act on. So if the market's been headed straight up, which it definitely has been doing the past, couple of weeks especially, you can come into the scanner and try to find weak stocks and short those if you think the market's going to turn, instead of trying to pick the high print on the index itself and possibly have it continue to go against you. Because the theory of again, trying to find weak instruments in a market like this, they're raising their hand saying, hey, nobody wants to buy me. So the scanner is going to find those quickly for you and also allow you to find entries and exit points based around the profiles. We've also got a section in the scanner that I think I've done some pretty good videos on that explain our TAS breadth calculations. It completely tells you which way the tide of the marketplace is headed. All right, and I'm going to talk briefly about this. Here's a picture of it. It's all within the scanner. So the studies that we've done in these breadth calculations, and what we've done is basically sum up and aggregate all the instruments in the S&P 500 to find out what percent of stocks are trading above their profiles on a long-term basis, and we're doing this on different time frames. But I want to talk specifically right now about weekly and daily. So we've aggregated the information, developed percentages of how many are trading above, within, and below. And then what we've done is basically put this in a graph where you can see the tide of the marketplace is long here. Very rarely has the S&P's been in a short mode as far as this particular indicator. And if it does go into short mode, it's definitely gone back into long mode. So what we've done is done studies on weekly and daily pointed in the same direction. So in both of these aggregate value of the profiles themselves on the S&P 500, there's a server doing a ton of calculations to do this for you. When these are both pointing in the same direction, the tide of the marketplace is long, and therefore you should be looking to be a buy the dip or a buy breakouts. If they're both shifted in the negative direction, then you're supposed to be, well, whatever strategy you're doing, either on the index or the underlying instruments, is supposed to be negative at that point. So here's a little bit of a P&L curve of some of the statistics we did for the past 3 or 4 years of being in the market 80% of the time, just with that simple concept of, are the weeklies and dailies positive at the same time, or are they negative at the same time, allowing us to go short? It's been very rare that we've been able to go short. But what that really has done for us is allow us to understand, if you can know where the S&Ps are headed, you can do a lot with the underlying instruments, because I don't think at any point in time that we've been as correlated. 90% of the stocks in the S&P trade with the S&P now. So you've got a very correlated market underlying the index itself. And if you can understand which way the market's headed, then, you know, again, you're drilling down into the instruments and trying to find opportunities, whether to be long or short with underlying instruments. The opportunity matrix part of the scanner, this is the part that I love, provides an algorithmic-based trade setup to choose from. This also allows the user to choose which time frames are best suited for the conditions at hand. So what that means is, within the scanner, you've got a matrix area. And this, I know you probably so far thought, wow, this is pretty subjective. But in the matrix area, we basically put it almost in a dummy-proof format that has 6 different algorithms, weekly, daily opportunities, and basically puts it into a matrix screens that labels these opportunities for you. So what I'm going to do is I'm going to block out the short side, or I'm going to block out the long side for a second. And within the S&Ps and the NASDAQ, these are the, let's just call it 12, 13 opportunities here on the short side. And I'm just going to pick one. I haven't looked at these ahead of time, but it's saying it's a daily short. All right. Now, this is a stock that's in the hole pretty badly, but the reason it's on the grid is because, and I'm going to show you this, we've got an entry, a stop, and a target column that points this out for you, a risk-reward scenario, which this stock's got a relatively high risk-reward scenario. The market's, I think it's climbing again today. Are we positive? We'll find out. But again, this stock hadn't been able to get out of its own way. And again, this is a stock in the hole. It's a relatively, it's a relatively inexpensive stock. But things on their lows go lower, and that's just a kind of an opportunity. There's another one. Here's another one. Here's a breakdown on Chesapeake Energy. Here's one on I guess that's Citrix. Here's another breakdown. These are short opportunities, and they're kind of few and far between. So here's a downtrend resistance stock that's basically we've broken below profiles and we're kind of hovering below. It's usually a continuation pattern. Man, I didn't think there were stocks like this left in the S&P that were down every day. Ooh. Here's Symantec. We had a pretty good breakdown on a weekly in Symantec. So now this is the line in the sand for Symantec right here that you could base either option strategies or long short opportunities. I'm going to put the longs back on the board here. Okay, so these are some reports that we generated recently out of the scanner, and the scanner gives you these as topics to be aware of. So this particular day, PPG breakout long, it was a daily pattern. This is when it broke out and above profiles, and it gives you again the entry, the stop, and the target. And this stock developed out to ring the register for about $400. Here's another one, Caterpillar, the stock that never goes down. So it was a support trade, long opportunity, daily opportunity. Again, entry, stop, target. We had a gap up there, so we cleared pretty much more money than the target was actually saying. Archer Daniels Midland, nice little opportunity right there. Picked it out ahead of time, and then we had a target being reached right there, and then the stock actually ended up going down. A lot of people will use the profile indicator that you can put on your chart to trade options, and what we've done here is basically just take Apple. This is a recent picture of Apple before it kind of recently moved up past this area. But as you can see, when Apple in an uptrend and profiles are still edging higher, these give you great inflection points to pick battles for option strategies. So in this case, you've had a little bit of a reversal there. That's a very powerful move when we reverse back in the balanced area. But you've had a chance to sell credit spreads or put spreads on the bottom, or just go long the instrument and maybe buy some puts at the same time around these areas. Here's an example of General Electric. Now this is, a lot of talk on the news about General Electric, and they're probably going to bust it up, I guess, now. But how nice would it have been to know when General Electric started breaking below 30, if you had it in your long-term portfolio, it never has traded above profile since, right? And now it's trading about 16. It's actually down here. But on the way down, at least you wouldn't have gone long the stock. And if you were using kind of the profiles edging down, the inflection points, you could have been able to pick battles and use these levels, so to speak, to perform strategies with the indicator right on your chart. And if you're looking at the scanner, I can go in here and I can save my portfolio. I can look at futures, Forex, make a list, save things that I like in the. So if I want to look at these trades later, I saved a few earlier, just checked them off. There's Coca-Cola, had a breakout on a weekly, so I wanted to keep that on my radar screen and go back to it. EOG, we had a nice little pullback right there the other day. But if I want to go in here and look at General Electric, I can type in GE. Well, it'll pull it up for me, and as you can see, we're trading below profiles in the weekly, the daily, the 240, and the 60. We're going to click on it really quick. So here's our weekly, and we never got a weekly close ever above profiles all the way down, and we never got a weekly close above profiles recently. So, again, this is about trying to block out one side of the marketplace. And in this case, GE, as soon as it kind of started breaking, profiles edged down. At least it was in that mode of okay to be short, not okay to be long. This is FCX, just showing some breakouts in an option possibility there. Checkpoint, or excuse me, Chesapeake. We had a breakdown in Chesapeake finally, and if this is an example I wanted to show, if you've got a volatility that's pretty tight that stays in force for a while, then you're probably going to have that impending volatility expansion. So the strategy here would just be buying a call and buying a put, even though Chesapeake's a $4 stock. It can go to zero. Trust me, I've seen it happen. Here's Tesla. When we have wide profiles, this is just an example. Maybe you're kind of selling an iron condor, like a put spread below and a call spread above. And the reason that would be okay to do is because we have a super wide profile right now, which means that's the balanced area, and the instrument could literally bounce around in here for a long time. Steve, I've talked forever.
You're doing very good, my man. I'm learning from you. After all these years.
Yeah, well, I mean, Steve and I have done so much work with this. It's, please do yourself a favor. We've got a 6-hour course we're included in the offer today. It's been painstakingly done, massive amounts of edits, and it's one of the best market profile courses out there, which again kind of transgresses into the information that you're seeing today in a very deep dive into the information. Steve, did you want to show any slides there, or do you want me to just kind of get right into it here of what we're...
About the only thing that I think would perhaps be interesting, I think, to folks in attendance is something I did actually when I was out in Silicon Valley, and kind of showing the power of before and after on these charts, because kind of if you're me, it's hard to appreciate the power of market profile and value areas without kind of seeing how naked and bare the decision making is without it. And if you want to kick over the screen share, I don't mind showing a few kind of examples of live markets, and even the audience can maybe throw a few tickers at me, and we can just do that side by side before and after. I think that'd be great.
Yes, let me do I change presenter or just give keyboard change presenter? Here we go.
Yeah, just say change presenter just for this moment in time.
There we go. I think you are gonna
okay, you got it. Let me
Hey guys, thanks. I know it's the middle of the day and you're probably all trading. I appreciate your attention on this. We're going to get into the offer in just a second.
This was actually a chart I was looking at not too long ago. If you could see that chart, just type a Y in the chat box for me. And John, if you can affirm you're seeing some Ys, that's good, because I can't see the chat here. Everyone can see my screen here?
Yes, they are.
Okay, good. This just happens to be, of course, because I'm a commodity trading junkie. This is light sweet crude, 4-hour time frame, 240-minute. And what you're looking at here, we're going to go through a few examples to really kind of hammer home the difference between, as John talked about, volume by itself down at the bottom. That's what you see here. Predictable spikes that are obviously related to market openings and report times and stuff like that. But I think the thing that John did a nice job of talking about, and well, John and I take it for granted, that there's really no edge in volume by itself. Really, its biggest benefit to us as traders is as an ingredient to tell us that where the value area is. So look at these areas down here, these spikes. Again, these are going to be typically around market openings and report times, but they don't give you any directional bias cues. But then the same chart is what you see over here on the right, with the TAS boxes indicator here on the exact same chart. And isn't it a different story? I mean, along this entire climb here, and it's been an impressive and a lucrative endeavor to be using TAS boxes on crude, you're getting further affirmation time and time again with these bullish breakouts to the upside above that red line. Remember, we're bullish, as John said. Using these same levels, John teaches techniques, and I know I do too, in live market conditions, where you take those stops and you're just trailing it behind these levels. As new levels form, eventually, of course, you're going to get stopped out, but not before you have an opportunity to kind of capture the right side of the market while making it really black and white on what side of the market just does not have those probabilities.
That's a great example.
It is, and this is not a cherry-picked one, because now I want to open it up to the audience. We can bring up literally anything if you got a ticker, you can shout out, John, tell me if what you see there, and I'd be more than happy to bring it up.
Sure.
Commodities obviously are fair game.
Steve's using eSignal right now, but we've got this on about 10 different platforms. Thinkorswim, actually, we just got done. So TradeStation, Ninja, all the usual suspects. I can't.
Lots of choices.
Yeah.
Lots of choices for you as traders. That's for sure.
So somebody wants us to look at gold, Steve, GC.
Sure.
And
here's gold, and here it is. This is happens to just be the same 4-hour time frame, because that's what we had just moments ago. But it literally could be any time frame. If we wanted to drill down into some shorter term stuff, as was suggested earlier, we can do it in the analysis. We'll adapt. But here again, I want you to appreciate how, albeit it's all fine and dandy to see that when those spikes in volume occur, it's a great gauge of liquidity for us as traders. Notice how this information down here doesn't give us any cues to be trading in this direction. It's all, it all comes with the benefit of hindsight that we see, oh yeah, it'd have been great to be long at 1250 in gold. But with TAS, let me move this out of the way here a little bit here so you can see. Look at how the difference, and this is on the hard right edge, folks. I think sometimes, John, even when I do these presentations live during live markets, there's always a few skeptics out there, and they say, well, yeah, did these paint afterwards? No, this is over on the hard right edge, intact, paving the path for your trading in real time on that that scary hard right edge. And look, notice again, bullish, 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 bullish. You're Xing out the short side. And John, I think you and I over the years get an abundance of Christmas cards when it's the holiday season, but emails of traders that say, you know what? Thank you for saving me from myself. You helped me not make a trade that I otherwise was really convicted to make, but I looked at your analytics and it told me just to, at the bare minimum, stay on the sideline.
Yeah, that's the biggest comment that we get, believe it or not. And Bill and Sammy, I'm looking at your questions. I promise you we're going to get to them, but I wanted to just make a footnote to what Steve was saying. He's talking about Christmas cards and things like that. The biggest comment that we get is it kept me from doing something stupid. And, as a trader, it's tough to sit in front of these screens and do nothing. I'm totally aware of that. It's tough for me to do it too. But, the statistical facts are the more often you trade, the higher likelihood you have of losing money. It's just a fact. And the profiles keep you patient. And this is all about making money. So when Steve shows these charts, and I'm going to answer your question now, Bill, or Sammy first. I notice you take trades from the green line and uptrend. Is this area developing, or is it level set by the time and the line occurs? So in the spirit of what I just said about being patient and waiting for the market to come to you or to kind of confirm and break through certain levels, that kind of slows at least my trading down, and it lets you only pick battles in high probability areas where you can more importantly play defense if you're wrong. Because you guys know, being wrong half the time, if you can do your risk rewards at 2 to 1, 3 to 1, and even greater, you're going to be a big winner. So Steve's kind of pointing to a couple. There's a couple of. And Sammy's question was, do you kind of let it come down into the green line or red line? That's where I tend to like to pick battles, is just letting the market. I like to look at the long-term view, and I think this answers Bill's question, which is walk us through a real-time decision-making process, please. So on gold, Steve's showing a 240-minute profile view here. But what I like to do is I like to look at the long-term view of gold, figure out what kind of mode gold is in general, relative to profiles on a daily or weekly or both. And then I will try to trade that instrument, Bill, by blocking out, okay, if the long-term view is, hey, the odds are to be long, I'll drill down into the 240, the 60, maybe even the 30-minute and say, you know what, I'm not taking any shorts. I'm only going to pick battles on the long side. And that way, we deal with a lot of institutional guys. In fact, the scanner was just built because we have our information on the Bloomberg network, and I speak at a lot of different Bloomberg conferences. And what the biggest complaint they had was, hey, look, we love your information, but we don't have time to surf over 184 stocks in our portfolio on multiple time frames and miss everything. And so the scanner really was built for them to sort and find opportunities and monitor their portfolio very quickly relative to the profiles. So again, coming from an institutional angle here, Bill, they look at multi-time frame confluences. So when they have, and I use this too, when I have inflection points lining up on a couple of different time frames, and the scanner, why don't you show them that area, Steve, the landscape view? We actually put, maybe you can blow that up a little bit, or your screen a little bit, yeah. So we put, see this area down below this, what I like to do when I'm looking at a stock too, just to kind of quickly sort through quite a few of them at the same time. I thought it would be cool, and Steve thought it would be cool, was just to put the level of the market, that yellow line, and this is on commodities too. I think Steve's looking at gold here. We've got a big resistance area around 1340, that general neighborhood, right? And gold hit that area, that neighborhood the other day. That was our targets from the long side, Bill, as we were kind of continuing to move up. And I like to look at the weekly, this is just me personally, let the daily kind of regulate that trade, but also be able to kind of look at multi-time frame inflection points at the same time. And what I did also, this was a pretty arduous process. We wrote about a 40-page Word document of what if scenarios to output an automated I guess text kind of dissertation on what's going on with the instrument that automatically changes. So again, going into the institutional world, those guys, you go to their office and they've got a stack of a mile high of research reports that are generally 2 weeks old. So they were like, can you just give me a real-time research report in here so I could just kind of do a quick view, read it, boom. And it changes, when the market's changing, so I could, again, deduce what to do. So, Steve, I just wanted to make a comment there.
Hey, John, that's a good point. I share a very candid and humbling story about, I spent a great deal of time in the commodity brokerage business, and I guess I was somewhat of an expert of sorts, and regarded as such. John, for many years I wrote research reports and had a very prominent following. We're talking many thousands of people following my every word that I would write and distribute, typically back in those days via email. And I share a very candid story, and I'm not especially proud of this, but John and I share a passion for this game called golf, where you take a stick and you try to hit this little white ball 450 yards away in a little hole.
It's a sickness.
Why in the world a grown man would put themselves through that frustration over and over again, I don't know. But my fast forward on this story, very prominent following for my research, and my love of the game of golf. Many of Friday afternoons led me to not miss my tee time. When, probably deep down, I probably could have used an update to a research report or a position or strategy that we had in play. But, look, I'm only human too, and there's life outside of these markets. And I'm coming to you again with my tail between my legs to say that there's plenty of Fridays where, going to play that game of golf drew me away from providing probably an update on the research report. And, most of the time everything worked out just right. But come Monday, there were plenty of days where it's like, golly, could have maybe added some value here. This resolves that problem. And here's why. The algorithm that powers this doesn't play golf. That's a good thing. And it refreshes, as John said earlier, at a 60-second rate. So the oldest this research ever is not 2 weeks, like John said in some of the institutional things. It's not even a Friday old. It's at most dusted off 60 seconds new. So it's always relevant, always updated, and regardless of the time you trade, you don't have to sit and hit the refresh button on your inbox anymore waiting for an update. It's always updated.
Correct. Steve, can I grab the screen back? Or I guess I can do that.
You absolutely can. Let me send it your way.
Let me do that.
And by the way, we did quite well. Don't you worry in my strategies in that time. We just probably could have done a little bit better. Don't throw too many tomatoes at me here in Chicago.
Did you want to show some more screens? I'm sorry, I didn't even ask
No,
yet.
that's it.
Okay,
No,
okay,
John, I'm just thrilled to be here and wanted to
great.
kind of show that before and after image, which I think is really a powerful kind of proof of concept for people to see as opposed to some of the more static stuff you get on a PowerPoint slide.
Yeah. So Bill, let me walk you through. Like, just throw an instrument out there, and I'm going to walk you through what I do to kind of analyze an instrument. Just any instrument, Bill. I'm not going to cherry pick something. If Bill's still awake. Crude oil. Okay. We have a tendency to put people to sleep, Bill. That's why I'm making that comment. So this is what I do. And again, I'm a little bit, I'm getting a little older. I don't necessarily like the excitement like I used to. By the way, if you're sitting in front of the screen for excitement, you need to stop sitting in front of the screen. It's about making money. So what I like to do is my trading has kind of been slowed down, and I like to trade more option spreads on kind of high probability setups. This is March crude. And by the way, I'm going to make a comment here. Some products you want to look at on a continuous contract basis on the futures, but some of them you want to look at kind of separated. I mean, crude kind of has backwardation and things like that going on sometimes. And November beans don't necessarily have anything to do with March beans. So it's hard when they make a continuous contract out of some of these things like cocoa or sugar or beans, or it really does the product not any justice. So some of them, in fact, in the scanner, I'll show you this in the futures area. Some of them we have continuous, and some of them we have front month or just most voluminous contract. Just wanted to state that. So we're looking at March crude. So crude, again, I like to look at the weekly. And again, when we have reversals back in the profile, I mean, obviously, sometimes we get stopped out. I actually was looking I remember when this happened. I mean, I'm not looking at the March contract back then, but we've had some kind of inflection points that I'd like to base, pick battles around in the past on crude on the short side. Here was one. Here was one. Kind of taking some weight off down here. When we broke out here and closed above for the first time, and then we kind of retested, what I like to do is, and then we have profiles edging higher on subsequently. What I like to do, this is just my way of doing things because I don't like to trade as often as I used to, is I look at the long-term view, because long-term inflection points on these profiles on longer-term views actually have greater relevance than short. Like a 60-minute profile doesn't have anything on a weekly unfair high here. Okay, so when we close above, okay, the worm's turning. I can't look at this from the short side anymore. Then I get the retest. Now this is a long-term inflection point that I can really put some weight against. And we had, again, kind of a profile high here. Then we're in the balanced area. It's kind of a little bit of a mishmash here. Then we broke out again. Then this is where, again, we're kind of compressing up into a long-term inflection point and breaking through. At no point in time during this run up here for a couple of weeks or month or two was crude saying it was okay to be short. Even though we had some gyrations here, we never had a new profile appear till right here. Then it was time to take some weight off. Right now, what do you do with crude? We still don't have a new profile attempting to appear here, Bill. All right. So my long-term idea is to still be the buy the dipper kind of guy. This is our time frame to the right. This is our daily view. So when we've got that weekly like it is, and we're kind of pulling back into, this is where you want to pick some battles on the long side until you're told wrong, until you at least have some breakage of the rules here. So that would be below 62.57. But again, your weekly long, okay, the daily is kind of my regulator of that weekly. New profile appears. All right, I got to start thinking about the run might be over for a little bit, or at least maybe get a better entry. Here it is. This kind of hit that neighborhood of kind of being the buy the dipper. I don't know if that makes sense, Bill, but that's the way I use the indicator. not me on this. Been looking into TPO and VP for a while. Volume price, okay. I don't know what that means, but so that's kind of a walkthrough scenario. What I want to do is get back to the slide for a second, because we got about 5 minutes before we've been in here for an hour. Who are these indicators and scanner good for? Any trader, intermediate, expert. Any trader wants to have a powerfully accurate tool to scan the markets. This is the exact same information that some large institutions are using. We do business with BNP Paribas. We do business with actually some guys at Reuters who use this. Bloomberg uses it. We've also got some guys at Bank of America. I'm here in North Carolina. They have a desk here that they basically run the whole desk with a lot of this information, just to name a few. Any trader who wants to stop guessing for trades, allow full clarity. Anybody who wants to master good risk management on all trades. One of the biggest comments that we get, Steve, is it lets you know when you're wrong, but also how to play defense. Because, again, a lot of your trades are just, they're not going to all be winners. Thanks, Bill. He said I'm not going to bore him to sleep. All right. So what we're in the offer today, you're going to get the profile indicator. Now we've got it on Thinkorswim, believe it or not. That took forever. Pinpoints high value areas, alleviates ambiguity, levels reveal specific entry, stop losses, and targets or exits. And that's just a picture there. Also, you're going to get the scanner. It's a standalone market timing tool built into the scanner. Remember, those breadth calculations are very, very powerful. And I've done a bunch of good videos on that, explaining how that whole mechanism works, basically divulging how those breadth calculations work. Clear analysis of equity futures and Forex via the dashboard. And really, what the institutions love, it's an opportunity finder. I think one of the sad things is that some traders get into, and I'm a victim of this too, is you get glued in on an instrument or two, almost in a personal vendetta against it. A lot of people get into that frame of mind with the S&Ps. It's not good. I mean, there's not always going to be opportunities on the same instrument all the time. So the scanner is something that kind of allows you to kind of hunt around and find those setups like we've been showing today that are just the ripest things in the world. So the scanner, I'm going to go into here and I'm going to say, look, okay, let me go to my dashboard. What if I want to see stocks that are trading on the bottom of their profile on the weekly? Well, not a lot of stocks are trading on the bottom of their profile. I bet we got quite a few on the top though. I want to find stocks that are trading right at the inflection points, and if you see that right there, they're all in the neighborhood. They're all saying top one. So Baidu is a stock that's got a massive line of inflection points on those multiple time frames right there. And I'm not saying this is a great setup. In fact, I haven't looked at this stock. Let's just look at it. Wait, what's the symbol on Baidu? Oh, there it is. So Baidu's kind of broken out. It's coming back and retesting this area it most recently broke out at, but that's also the same thing on the daily, the same thing on the 240, the same thing on the 60. So you kind of had the breakout. You're kind of coming back into this area. It's a great place to play defense on the long side. You know, I'm not going to tell you the market's going to come down anytime soon. That's it's like catching a knife. So it's an opportunity finder. That's just one example of how to use it. You're also going to get this 6-hour market profile course. This is a deep dive into the original market profile that transcends into our derivatives, and then how to apply those derivatives and how to use it on a day-to-day basis. And Bill, I think this is one of we've been told it's the best course on market profile and our derivatives, of course, in the end, out there. And we're including this in the package. That alone, I think we sell for $497, right, Steve? Or maybe higher, $997.
Which one is that?
Market profile course.
Yeah, the course itself is a $500 value, and we sell a lot of those. Let me just tell you. So right. It's a heck of a value, and you are very gracious today.
Yeah, you're going to also get some live market sessions. We kind of do some things on a weekly basis. Steve actually has a continuous room that you can go into also.
I do, and anybody that signs up, you'll have an opportunity to join me. It's basically a perpetual chat room, 24/7. You can share charts. It's really a fantastic way to kind of share information with other market profile traders using TAS that might be a little further down the road, and there's a lot to be learned from somebody who's maybe a couple years down the road as a client of ours saying, hey, look at this setup. Or if you like crude, look at I trade crude too, and it's just really fantastic, John. I've been thrilled with how we've grown there.
Yeah, I know, it's an awesome venue. I mean, and I think, you know, the light bulbs aren't going to go off in the clouds part all of a sudden. I mean, in fact, we tell people that, you know, just you're transitioning to something possibly new here, trade light or just, you know, demo trade, whatever. Just kind of get the feel of it, do some walkthrough scenarios, and that environment that he's talking about is a great place to, you know, the worst thing in the world is to just sit alone, I think, and you kind of start seeing things that aren't there, and you know, next thing you know, it's 3 p.m. in the afternoon, and you're eating a bowl of cereal for the first time. I mean, it's great to just kind of collude, which is not the greatest word in the world these days, but to just kind of just get some perspective on things other than your own. Because remember, that's also going to slow your trading down a little bit, which is not a bad thing. So today you're going to get the 6-hour course, the scanner, that indicator, $4.97 a quarter. It expires at 3 p.m. today, actually, not tomorrow, because we did an event last night. And basically, you're getting $600 off. This is not anywhere except if you go to the Trade Thirsty link. If you have any questions, they've got an email, help@tradethirsty.com, that you could ask some questions. And if you get on board, we're going to try to do our damnedest to make sure you ring the register with our information. We want you to come into these venues like Steve was talking about. We want you to spend the time on the 6-hour course. You know, we've done about an 80-page manual on the indicator that you got access to. You've got all these tutorials that we couldn't really kind of get too detailed with today on any of the products, but they walk through, Bill, in my opinion, kind of staying in the spirit of you know, walking through a process. They walk you through a process. They basically kind of pick through every single part of the what we're talking about today, and I think, you know, make things pretty clear in my opinion. But we're always going to be here for questions, and as well as these live market sessions. And somebody, well, I think they left actually. What is the smallest time scale that has value? I usually trade on 5-minute time frames. Okay. Well, Steve, do you want to answer that one?
Yeah, you know, I'll tell you what, when you're first getting started with a new method like this potentially and a new set of tools, I think it's actually important to start that in your comfort zone. So if for you it's 5-minute charts, start with those 5-minute charts. John and I have always told people that, you know, when markets get noisy on these short-term time frames, one of the best cures is broadening out the time frame. It is one of the single easiest things you can do as a trader. So if your 5-minute charts get noisy, maybe you look at 15 or 30, or you broaden out to 60. A lot of times when I'm in my live chat room and I have someone who's kind of hardwired to trade 5 minutes, I just ask a simple question. I say, why? Why 5 minutes? And a lot of times the answer is not exactly a scientific response. It's just, I want the action. And as John said earlier, you know, that's not a good reason to trade short term. Some people are equipped and their trading style is very suitable for short-term trading, but when I talk to a retail trader and they say they want to trade 5 minutes just because they want to push the button a lot throughout the day, there's kind of a you know, kind of a setting up for things to possibly be more in favor of the house than yourself. And so what ends up happening is people spend a little time in John's venues and my live venues. They end up learning that actually over time pushing the button less It'll save you on your commission dollars, but finding higher quality, fewer opportunities ends up having a positive impact on the bottom line. But all that being said, my recommendation, start by looking, if you go on to subscribe to the product, and I sure hope you do, start with those 5-minute charts. And then from there, broaden it out. If you're finding that your decision making is still noisy, broaden it out until you hit the sweet spot. And again, following a few simple rules that we reinforce with you on an ongoing basis, you can kind of paper trade or sim trade. How many signals am I getting on my 5-minute chart, crude oil or whatever market you trade? You know what? That's too many signals. I want to try and hit 2 or 3 trades a day. Well, maybe I should be on a 30-minute time frame. So that's part of that learning curve that you'll go through, and it's very unique to you. But what's neat is that in the venues that we have for you, there's a lot of sharing that goes on. And I'm like in the chat room right now, and some of our longtime users are in there talking about crude oil and gold, and I'm looking at their charts right now because they've shared them, and they're just talking through these things: bearish breakout, pull back to the low value area. I'm reading these right from the chat room. It's not us, it's our loyal customers. And so that's where I see tremendous benefit to you folks that are joining us. Come and be a part of the community and learn not only from John and I, who are in there as well, but learn from others that have found some unique ways to deploy the information. Long answer to a short question. Any other questions? I can't see the questions actually, so John will have to kind of take the realms on any additional questions. But I guess from my stance here as president of the retail side of our business, I'm rolling out the red carpet for you to join us, and we look forward to, as early as Monday, seeing you online with us, learning this stuff and starting to deploy it in your trading. And
Steve, can you hear me?
I can hear you good, John. I think folks been able to hear me, but
okay.
You went dark there just for a moment.
Okay. Yeah, I was going to say that a couple of footnotes to what you were saying. And we've done presentations for brokerage firms, and they've kind of given me the hook after I said this. But talking about trading less, that's a whole nother webinar. But successful trading. Somebody told me a long time ago, successful trading is supposed to be boring. And if you want the excitement, you're going to pay for it. So it's not an entertainment venue. And what Steve's kind of alluding to is, even on gold, I'm showing gold right now. So if you want to trade on a 5-minute chart, this is our daily on gold. And we talked about that reversal right here, back in the balance area on the weekly, getting back above 1250, I believe it was. And Bill, this answers your question a little bit too. We start breaking out. Okay, now on the weekly and the daily, there's like not a lot of reasons to be going short. So if you're going to trade on a 5-minute time frame, and I'm not going to go back that far in time, but if you're going to trade on a 5-minute time frame and the long-term leverage is to be long, then what you're doing here, and I don't think this is that same time frame, but you're kind of opting out on shorts, right? You're kind of picking battles on the inflection points on the long side. There, breakout. Okay, take some weight off. It's either buy the breakout or buy the dip. Buy the breakout or buy the dip. There's the new profile. Let's sit tight. There's the buy the dip. You're blocking out you're not trying to catch these shorts right here. You're buying the dip. You're buying the breakout. You might be trying to hit this inflection point here. We never got there. There's a buy the breakout back in the balanced area. Okay, we might be short-term time frame. Need to probably sit tight here. Here's another kind of little bit of a harrowing experience on the bottom of the profile. There's another one. There's a buy the breakout. But you're not trying to take these shorts. But I will say this, right at that peak right there, and let's go back to the weekly. We are at the top of a long-term profile, and that is huge. That's a big deal. So not saying it's time to go short, but the little bit of an uptrend might be over. Does the software work on Sierra? Yes, it does. But what I was trying to get across right then is try to put it into the context where you can block out one side of the marketplace and only be going short or only be going long. And that's why I usually start, and Steve does too, with long-term views and then drill down into those short-term time frames if I'm trading on the short term and just say, wow, I'm only going to go long today. Whenever those opportunities present themselves, because I know the long-term view is to probably be long. So that, is there a separate customer portal for the trade room, Steve?
Yeah, so you do get set up. It's not built within the software per se. So yes, it's a separate, there's a web-based access point. There's also a nifty little mobile app that I can tell you on my flight out to Silicon Valley, I actually was 30,000 feet in the air and through the Wi-Fi connected to my people in the trade room on the mobile app. So it's there's plenty of ways to stay connected and share information.
Yeah, and a lot of folks use this information to trade options, and I certainly do. So there's different kind of bantering back and forth about different strategies based around the same signal. So, if we're at the top of a profile here, and I'm going to go back to gold, kind of reached our weekly unfair high. This was a big wide profile too. I mean, this is, there was going to be some volatility here, and that daily kind of regulated this up. But, what do you do here? Either if you're long, you got to start taking some off, or you can start, gold. I personally feel that the dollar is probably going to continue to get hit, so gold might have to reprice itself even higher. But you're at an inflection point that you kind of rested at. We hit it last week. So selling a credit spread up here, again, you got limited risk. You're at something where it bare minimum might stall, maybe even turn around. So there's different strategies to use against, finding opportunities on the screen on your chart or within the scanner that I was alluding to earlier. So I'm going to flash this screen one more time. This is basically how you take advantage of this package. And again, the course alone we sell for this. Steve gets angry when we do these crazy deals.
I just make sure there's nothing extra in his coffee when he gets very generous like this. I have to reel him in afterwards and say, "What are you, crazy?"
Yeah.
But you know what? It's out there. It's there for the taking. And I think we really sweeten the pot. As it relates to that price. I think over the years as I've been in this domain of trying to get the word out about TAS and how it works. One of the questions I like to ask, and I did this of the live audience last week, and that is, how much are you risking every time you push the button as a trader? And usually, I can't see the chat here today, but the responses will be $250, $500, sometimes $1,000, sometimes even more. And that's every time you push the buy or sell button. And then I say, how many times do you push it every day or every week? And what's interesting is, we might hear someone say, hey, I don't want to spend $500 to be a better trader today, but, I'm more than willing to spend $250 20 times throughout a month, and you're willing to spend tens of thousands of dollars in risk, but you're not willing to exert $500 every 3 months to make a better decision every time you do that. So it's kind of a, kind of an oxymoron of sorts when we hear that from traders. So it's our hope that you found this presentation to be candid, real. John's a real person, I think. I'm a real person, and we're good guys that want the best for you, because it's ultimately good for us long term too. If market profile goes on to be what helps you trade better in your trading endeavors. So
I don't know if Bill's commending you on this, but he made a comment. He said that's a hell of a sales pitch, Steve.
I'm reading the teleprompter here, guys. It's true though, if you guys think about it. But yeah, thanks, Bill. Thanks. I'll keep working on that one.
I tell you what, Bill, and anybody else that's kind of still wondering about some things here, and which kind of falls next to what Steve was saying. This is a 30-year bond trade. I mean, this has kind of been the bane of my existence for a while. I really have not understood. I mean, the 10 years obviously been edging down, to say the least. But he meant it as a compliment, Steve. He just wrote that in. But this
I got alligator thick skin. I'm a trader, guys. It takes a lot to beat me down.
This 154.
Well, my wife's pretty good at it, but we won't go there. That's a different topic.
This 154 area in the 30-year was something that was kind of nerve-wracking to me for a couple of weeks. I didn't understand why it wouldn't break. Finally, we got rates going up. But what I did finally when we broke down the weekly, finally started getting away from that. Just the other day with the tax things and the market getting goosed again constantly on the long side. This little area right here, 151.07 on the 30-year, I personally put on short bonds, and I said, look, I'm not even going to look at this anymore. I'm going to walk to Argentina and come back and just stay short on with some calls that I bought in the money on this. And I put on a pretty heavy position based on this profile here. And finally, I mean, 30 years should be way more down than this, in my opinion. But finally, we've got some pullback here. And I was actually this morning able to sell some puts against it. So now I'm kind of locked into this thing that was a profitable trade based on the profiles. And what Steve said, this was a little bit more of a significant position on a relative scale for me, but I thought the opportunity was there. And, I think Steve was talking about people normally put 250, 500, kind of risk out per contract. This was one where I finally just dug in and said, you know what, thank God we got a little bit of a retracement after that pull off of 154, and this was the level, and this has just been raining money. And I hate to say it like that, but this has been a long time coming for these rates. The 10-year, which has been a lot easier to deal with. If you're trading, this was the beauty trade here. Trade below, go back and touch that weekly inflection point. This has acted a lot more saner than the 30-year on a relative scale. But Bill and Reg and Sammy, you can make your whole year sometimes by understanding, okay, the stars are lining up. I've got a couple inflection points I can pay attention to here. And I can put on a little bit larger position that might be hedged and just kind of sit tight with it. And then these are kind of rounding errors when you talk about, what are the tools of your trade and how much do they cost? And that was my sales pitch, Bill. It's probably not as good as Steve's. Guys, I guess we're going to close this up. You've been great, and thanks for being here today. It's been our pleasure. Steve? I think Steve might have left here. Well, are there any more questions? Testing? You're welcome. Thanks, Sammy. Thanks, Bill. Thanks, Carl. Guys, I'm going to close this out, and you guys have a great weekend also. Thank you, Reg. Thanks, Carl. We think so.